These claims are very serious. We're talking like the biggest fraud in human history type of serious. And the market is having a pullback, which seems to add some credence to these claims. The companies eat their own cooking.
It's actually quite common. This is the bedrock of how economics work. And so there is risk here. And especially at this magnitude, we're talking about hundreds of billions of money changing hands to build out these AI services and the infrastructure needed to operate them, trillions of dollars of equity value that investors have in companies like Nvidia. And if you're a company like Nvidia operating at this scale with this much cash and cash flow coming in, as a shareholder, you would expect them to invest in their core product and core services with that cash. And if they're right, if there is that much runway ahead for all of this AI infrastructure, equity is a much better way of financing all of it in the long term for Nvidia than simply going about selling product on credit. Nvidia knows it has revenue concentration risk, and it behooves them then to make sure that competitors to big tech survive so that they have future revenue from many different sources.
I think it's important to remember that we're not writing all of these risks off. We do agree that these are risks. There could be some truth to any of these claims, but we're trying to look at this very logically and moderate. And ultimately, we've been pretty clear on what the real risk for Nvidia is. Nvidia's main customers, as we said, are the hyperscalers. And eventually, those hyperscalers are going to stop spending gobs of money. And when that happens, we're going to have a down cycle on our hands.